this much anticipated launch of an ETF around Bitcoin is upon us, and I wanted to take a couple of minutes and go through one of the questions we saw a lot of in the second part of last week, which is, what does this mean for the broader markets? And then also maybe a bit more specifically, what does it mean for crypto and crypto-related assets? Remember, crypto doesn't have to be a currency or crypto token or whatever. It can be equities. There's a lot of equities that you can now play that are very much tracking indirectly these assets. So before we look at some charts, I want to just kind of paint a broader picture. If you look at crypto assets, what's really been happening over the past, I'm going to say 12 to 18 months, very specifically, we've seen a lot more of institutional adoption, and I think everyone knows that. And that really, at least for us, has been something that's been a long way coming, but also it's really made this a valid asset class. It's going to remain volatile. It still is at its infancy. There will be plenty of ups and downs and good news and bad news. All of that comes with an emerging industry, but we think the masses of institutionals that are adopting this, it makes it very difficult for this to become a non-existing asset class once again at some point. So I think it's here to stay, I guess is my way of saying it. So a Bitcoin related ETF, and I say related because it's not really the ones they are going to approve or are projected to approve, are not really based on the underlying asset of Bitcoin, but actually on futures contracts, because they want to have more transparency with regulated exchanges and that kind of stuff. So from that perspective, what's going to happen, and this is the good news, is that Bitcoin and some of the other markets thereby within this space will become more accessible to a lot more people, including investment advisors, where they can offer it to clients and so on and so forth. It is not exactly a very efficient way of getting access to it. I think almost by definition, a Bitcoin ETF based on futures is going to underperform the Bitcoin asset. And if you need more information on that, let us know. We can always follow up on this with a more in-depth video, but just the way futures are constructed. Let me give you a small example of why, but before we go into this, maybe one more point, and I have one incredible chart I want to share with you. I shared it with our clients and members over the weekend as well, and it's bullish. Let me just say that I think the overarching sort of near-term sort of result could be that a further risk-on move takes place in Bitcoin, but also in broader risk assets. And that's because there's a positive correlation on risk-on days or weeks or months between the crypto assets and general risk assets. I'm sure it's going to change over time, but that's what we've been seeing generally. So I think in general it's a positive thing, at least from a momentum perspective. Yes, we could certainly see a sell-off right after the ETF launches. That's always possible, but I think broadly speaking it's a positive. So let's look at a couple of charts, and I think these are really, really telling. This is a chart of Bitcoin futures, and what I wanted to quickly highlight is this, what we call contango in the futures market, but more specifically, actually, this is Bitcoin itself, excuse me. And you can see Bitcoin here is currently trading around the high 61,000s. 61 right now as I'm recording this, 61,750 or something like that. Let's have a look. Keep that number in mind, 61,750. Let's have a look at Bitcoin futures, and let's just look at the front month. And you can see this one's trading at closer to 62,220. So we're talking about, about a 40, 50 basis points, 0.4%, a higher valuation, if you will, for Bitcoin futures. And what that's going to do is, if you invest in that ETF, you're going to constantly overpay for being in Bitcoin, because the price of Bitcoin futures will always gravitate towards the price of the actual underlying the closer you get to to expiration of that Bitcoin uh, uh, futures contract. So that's an issue. Nevertheless, again, I think it's generally a risk on a bullish sign, and I think it's a good thing in that it's in the sense that it gives people access to it that couldn't access to it, even though it's certainly not a very efficient way. Having said all that, I want to bring up a chart that I constructed over the weekend. I've shared it with our clients as well. And what I did here is I took a couple of, actually 4 specific assets, and I'm going to walk you through from top to bottom and what these are. The point is they all have the same pattern, and it's basically a bullish pattern is my point. The top one's Ether. It's the token that's on the Ethereum network or represents the Ethereum network, however you want to phrase that. Basically, we could call this a cup and handle. If you want to be technical about it, it's a bullish pattern. You could see that, all else being equal, path of least resistance would point to the upside. You look at something like Marathon Digital. It's an individual equity. The ticker symbol is MARA. Same pattern. You look at Coinbase. This one was only an IPO this year, so it doesn't have any data before April or something. But again, it's the same pattern. And of course, Bitcoin itself has the same pattern as well. So this is what I'm telling you, or what I'm thinking is that if this is to be a bullish thing for the entire asset class, and quite frankly, risk assets in general from a trading perspective, then we have a pattern here that's backing all of these assets. So whether you want to buy Bitcoin, you want to buy Coinbase or Marathon Digital Holdings as a stock or Ether, they all are displaying the same pattern. Now that's a good thing if it's bullish. It's also kind of a good thing if it's bearish, if it doesn't work out, because if the chances are pretty high that if this whole rally doesn't work out here over the next, let's say, 3 months or 4 months for these assets, it's probably going to not work out for any of them, right? Because the correlation's quite high. It constantly fluctuates. So long story short, we do think the ETF is a good thing in the sense that it gives people access, although not very efficient, and a bit costly if you think about it that way because of the lack of efficiency. But in the end of the day, we do think it's a bullish thing, and one would want to be bullish these assets from a multi-month perspective. It's, I think, very difficult to trade like in a very, very short term. So there you have it. Hopefully this helps, gives you some perspective, and we'll see you again in the next video.